Hi and welcome to the Market Alert for Wednesday, the 6th of January 2020. So Wishy-Washy's been out with the checkbook again and it's promised 4.7 billion, which means divided up 9,000 to individual firms in the hospitality industry to cope with the lockdown. But ultimately, of course, this is where it ends. This is the main headline this morning on the business section of the Sky News website. Lockdowns and downbeat end to 2020. CUK on course for double-dip recession. Well, what a surprise. I've been talking about this for goodness knows how long. And certainly with the advent of the stock market last year in February, and then, of course, being locked up for 3 months, the insanity continues. There's no doubts about that. And speaking of madness, what else have we got? Save the date. Today is D-Day for Trump, by the looks of things. January the 6th is America's rendezvous with history. The big question is, will Vice President Pence come through for Trump and challenge the electoral votes in key states? Will he stop the steal, i.e. the Democrats taking it? Well, I would say that the Democrats have got it. And that's good news for us as traders, because once Biden's in, you'll get a bit of a rally in the stock market. But after that, it'll be printing presses galore. These are the party that wanted all the money printed last year. They printed 7 trillion, I think it was. By the time we got to a few weeks ago, where they printed another 1.4 trillion and gave US citizens, again, $2,000 if they earned 75,000 or less, and $600 per child. So, the printing presses, you'll be able to see them smoking on this side of the pond once the Democrats get in. So, yeah, it's game over as far as that is concerned. But you'll get the initial rally once Biden's inaugurated. What else have we got? Well, we'll have a look at the implied volatility whilst we're here. This dropped yesterday because the stock market's rallied a bit. So we're just back at the 20-bar moving average, 1978. Again, we're stuck in this sideways range. Coiling, as I say, waiting until Biden is inaugurated, and then the party will start, because the US are bound to lock down, no doubts about that. They're not going to do that while Trump's finishing off his tenure. It'll be the first thing that Biden does, though, and it will be severe as well, because that's what they love. They love the control. So that's going to happen as well. So this is why this is just coiling nicely here, getting ready for what I perceive to be that sort of event, because the Democrats absolutely like the Keir Starmer of this world. He's always putting his 2 pence in, to get control, or seeing more government control over individuals. So that's coming. That's going to crush the economy. They're going to print like it's gone out of fashion. So that's good news for precious metals. Again, the dollar will continue to remain on the skids. So let's see what yesterday brought. In the German DAX, the market traded down to just below the 38% and the previous day's low, and then managed to rally up. And again, you can see overnight prices are moving to the upside as well. At the moment, we're at 38%. We've got the 50, 62, 78 and 89 on the upside as well. So keep an eye on these prices back above the 5-bar moving average, already above the 20-bar as well. So still bullish for the German DAX. And there you can see, as we go to the 2-minute chart, the market trading to the DP and now trading way above it. So that's where it was overnight. Came back through the 200 MA as the night shift kicked off. We can see the previous day's DP, and then the market sailed down through all of the averages and started to hug the BRN down here. It kept coming back to this level, which is the 650 level, the blue line there, and has moved higher. And once prices got back above the DP, they then became, and the 200 MA became a support. And you can see this here with the subtle buying bars just trading above, and then the selling failing to get back through. And even here, failing to get back through, was immediately discounted. Now let's see if anybody wants to sell. They didn't, and they've moved prices to the upside there. So yeah, if we have a look at a compressed view, we're not far off the previous day's high, that's for sure, and the all-time high is quite a distance away still, isn't it? Yeah, 918, but it wouldn't take a lot to move the market up to this level. So at the moment we're bullish. We could have a shakeout, then move back. Who knows? It depends what the futures traders want to do at 7 a.m. But certainly longer term, we can see where this is heading, isn't it? It's keeping the upside, keeping the illusion alive that everything is fine. I mean, you talk about smoke and mirrors. We know it's not fine. We know it's not going to be fine. And yet, somehow, they just keep managing to manipulate this to the upside. Prior to the high-frequency trading and the computer algorithms, back in the 90s, when something like this happened, the stock market would have been on its knees, and rightly so, because of the decrease in profits, etc., turnover revenue. But now you've got QE since 2008. It's a one-way bet, and that's how it's going to be. We'll get more shakeouts like we did in February, no doubts, but they'll find a way of bringing it back. Or will they, once Biden's in? That's the question. Will they? Because they're more about control than freedom. So we'll see. We'll see what happens there. Let's have a quick look at the Dow. This also moving to the upside, still above the 20-bar moving average, even though we've had a couple of dips below this, but still in the strong bull market of the last few months and remaining that way at the moment. 30,801 is the all-time high. As I said yesterday, amazing how many points this market's put on in just a few weeks, but that's been the case for the last 12 years. And certainly from down here where we had the sell-off in, I'll go back a bit actually, it's the wrong chart, let's go to here. When you see how much the market's pulled back here, from the low that we had in April, 18,000 and now 30,000. You know, you can see how much the market's put on. A huge amount of points during the last 10 months. Well, actually, it's not 10 months. This is down to April. So the last 8 months. Incredible. Incredible, that is, or 7 months, yeah. So yeah, a lot of manipulation there to the upside for the Dow. And finally, let's have a look at what we've got for today. The Italian bank holiday. The main one today, or the main ones actually, just reading through these, are ADP, Bailey speaking, and also the FOMC meeting minutes. But there's no press conference with this one today. So again, just keep those in mind, though. 2 p.m. is the main one before the US opens, and 1:15, of course, you get an idea for the non-farm payroll. That will be out on Friday, which you can see there. Okay, that's it for part one. In part two, I'm going to have a look at yesterday's trades and look at a bit more in detail. So that's the roundup for what I'm expecting to continue today or from yesterday, and also for today's trading session. Okay, let's have a look at yesterday. The market started to move higher, and you can see there's in the futures market hit this BRN around that would be 750, and then was sent all the way back down to the 200 MA. So I'm just going to roll fast through all of this because obviously the market was waiting to open. It traded to the DP, and then we start to see the selling coming into the market. The averages change 5 below the 20, and then you can see here we go through the 200 MA and all the way down to the previous day's close. We go through this down to the next BRN, which is going to be 650, and we then see them buying back in at this level temporarily, and then they send the market down a bit lower. And you can see here straight off how big this volume is, and the market will stop in this area. And this is a very interesting price bar here because you can see how narrow it is, and the volume is 90% of the previous bar, and the market stops. And there you'll see them buying back into the market. This is a case of those that were short are buying back, and there could be some other buying in there to bring the market back to the upside, as well as others join the party, as you see there. moving back up to the close. Huge volume there to drive the market up to the 20 bar moving average and the close. The market then becomes quiet. A lot of volume in this bar, but not much in price range. So again, it looks like there's an absorption of the sell orders coming into the market, because if there weren't, then the market would have moved back to the downside. So there you see the reversal, with prices now attempting to get through both the 20 and the 200 MA and trading up to the DP. Again, having to force its hand at this area with the increase in volume, and attempting to move higher. I'm having a look at the daily chart just to see where we are above the 38 and just touched the 50% retracement there, and you see a bit of weakness coming into the market at this area. You've got two here where you can see the volume there again is more or less the same in each, but the market's making no progress to the upside. And then there's an attempt to do this. I drew in the high from the upthrust there, and then the market shows even further weakness as prices then start to drift lower, closing below the 5 bar moving average, with one more punt to the upside through the just come back through the high of the upthrust there at 739, up to the BRN at 750. And then I'm having a look at the daily chart. I was having a look at the daily chart. There we go. I can just find it. There we are. You can see there the market stopping at 50% retracement of the previous day's bar, which is why I drew that in yesterday's market alert. So that being the case, the market then runs out of steam. We see the 750 there starting to be a bit of a resistance. The market manages to move through it. The volume does increase, even though it's subtle below the, you can see they're starting to move higher again through this area. And then we've got some more potential weakness there. The bars start to narrow off, and then we see prices starting to come back once they close back below the 5 bar, the BRN, and then we find a bit of an increase here at the DP level. But once the DP level gets broken with a potential sell signal here, we see prices moving lower. Now, as this moves lower, we need to take out the 200, the BRN, and then we've also got the close down here as well. So prices move lower. I was surprised actually that we sailed through this so easily. And that's what you want to see. You want to see selling coming into the market when you go through these sort of crucial support areas. You want to see those red bars, prices moving lower. And then they said, hang on a minute, we're bringing this back. And what I did was measuring from this high, low to this high, and you can see it's 62% at the close. And that's exactly what they did. They brought the market back. You can see the volume has increased significantly. There was 59 points on the table at this point, but I didn't get that. I ended up with 37. I was hoping the market was going to reverse and continue to move down towards the area where it had found support in the morning. But what I want and what I get are two different things. You have to trade what you see, not what you want. And the market then just reversed and came back. I'm going to fast forward through the rest because the market traded sideways, and we'll move on to the afternoon session. You can see there it just became really quiet, and prices then moving back to the previous day's close, and then finding the low over to the left, which is what I wanted it to do when I was in this trade. But of course, it didn't do that. And again, you can see there prices finding support and being brought back. So it's important to draw all these levels in as you are watching the market. So I'm going to move on. Again, what I've done here is drawn in the fibs from this high to this low and then projected them back as well. You can see the DP level is also a 62% area there as well. And then drew them back into the downside, to the upside, just playing around with what the market's doing there. But anyway, in the afternoon, we can see that they'd moved prices down, and we see a nice cluster of buying here at this level. So the opposite of what we saw on Monday, they wanted the market back up, and that's precisely what they did. They had the shakeout mid-morning, and then they just moved the market to the upside, which you can see there, just a one way, all the way, bringing the market back off the 38% because the market had moved lower. And you'll see a bit of resistance, the market trading sideways, holding at the 200. Then we get the news. We had the ISM, which was coming up, so the market drifted a bit lower, and somewhere here, if I can just grab a hold of this, you'll see the news was positive. Eventually they released it. It took a long time to get the news out yesterday. I'll just drag this a bit more on the timeline. You can see how long I was trying to get the news. Still no news, so keep going. There we go. So eventually the news was released, and the market had a bit of a positive move to the upside to begin with, but then this all faltered, which you can see there. You've got some selling coming into the market there, but at the 200 MA as well, and the close. And now, of course, with the other side of the close, whereas in the morning session that was being used as support, prices attempt to move higher, and then we get further selling coming into the market. You can see this here, a lot higher than the previous bar, selling pressure up thrust there. They try and hold the market, got a bit more selling there, and then they bring it back again in just a moment. The 200 MA there is supporting the market at the moment. We get a shake out to the downside, and then we start to hold prices once more, and then prices just traded sideways. It just drifted. It was incredible. All of a sudden nobody was interested. They didn't want to sell it, and the market just drifted to 25 points below the BRN, 50 points from the selling pressure up thrust. And then eventually prices started to try and move back to the upside. And then, of course, by the end of the session, they did, as the Dow saw a huge influx, probably from the plunge protection team, moving prices back to the upside. If you have a look at the Dow there, you can see previous day. That's not the previous day, that's the weekly chart. So there you go, you can see, and you can see the buying there as well. Look in the 5-minute chart, you'll see the rally to the upside. Just switch that, and there you go, you can see it there, mid-afternoon, mid-afternoon. See there, you got you, and then it's up. And that's what they did. They brought the market back. And that's what they're going to keep doing until they can no longer do it. There's no reason for it to fall out of bed at the moment. That will happen when America's shut down again, as I mentioned earlier, with Biden. Okay, that will do it for this one. As ever, thanks for watching. See you in the next.